talk to your servicer when things come up and say, he's not doing well. He needs to be in a service. He needs to be in a retirement home at this time, or he needs to be in nursing care. But I'm still here as a primary home. And they go, okay, great. That's all they need to know.
Financial independence,
freedom,
financial picture,
independent financially,
financial future,
financial freedom and wealth,
financial independence.
Get your fill, financial independence and long life. Hello and welcome to another episode of Get Your Fill, Financial Independence and Long Life, where we explore ways to achieve those two goals. And Laura Phillips is with us today, and she can help both of those things happen. She is a certified reverse mortgage specialist, and she focuses on your retirement needs and how home equity can help. Reverse mortgages are not just for those in financial need. They are a part of your retirement financial picture. Thanks for being with us today, Laura.
Thank you so much, Christina, for having me on board. I really appreciate visiting with you today.
Oh, me too. So I think there's probably a lot of confusion about reverse mortgages, about how it kind of works and what happens if you kind of live too long in your house. And, I think that's a question that's probably on people's minds. So why don't you just sort of start as if we don't know anything and give us a good explanation of how it works, and then we can jump into why you would want one. If that's
absolutely. Let's start with a little history. It's been out since the Reagan era, so it's been around for a long time.
Yeah,
I would say in the beginning years there was a lot of thought about what was going to happen at certain times. So one of the things that came around in the early days of using a reverse mortgage was they didn't add the second spouse, which is usually the wife. So when the husband died, the wife was literally left on the street, thus the widow on the street. Very bad PR. Literally. So over the years, the reverse mortgage, which is governed by HUD, it is a government product underneath the FHA flagship. It has looked at making sure that both spouses are on the loan, thus no one gets left on the street. And if you're not married, we have issues even around how we can cover those scenarios. The other thing was that I think that people lost their homes in the early days was because nobody thought about, could they actually make their property taxes and their insurance? The only way there are only a couple of ways, but the biggest way you can lose the home in a reverse mortgage is if you don't pay your property taxes. Tax liens cut across all mortgages. They become in first position, and no lender loves that. So there again, when it went to tax sale, all of a sudden the senior was like, well, I could never really afford it. So this is some of the things that they've turned to make it a kinder and gentler reverse mortgage. So what I tell people is this is not your grandmother's reverse mortgage. They have really thought about how to make this better. They being HUD. So people concerned about, what if my house, how could I lose my house? Well, it is with not paying your property taxes or not occupying it at least some portion of a year. So you can go off and take vacations, do whatever you need to do, even go into rehab because you got hip replacement, whatever. You can come back and you're not going to lose your home. So those are the two biggest ways.
So as far as the actual reverse mortgage goes, so it seems like can you just sort of explain that? Are you like selling your house basically to the bank, and then, do you know what I mean? So people who aren't familiar with the product at all.
Absolutely. It is a loan, just like any other loan you've ever done in your life on a home. Mm-hmm. So it has a lien against the property, but you stay 100% entitled. So you're really selling your house to the bank any more than you would have with any other loan. They're going to put a lien on it. It's collateral for the loan money that they are, quote, lending you. So you're always in property title to your property. Let me see if I can think about what the question was. I'm sorry, blessed myself in my own head. I apologize. Repeat it or let me refresh me so I know where I am.
Well, I just think if people had never heard of a reverse mortgage before, can you just explain how it works?
Absolutely, I can do that. So reverse mortgage allows a senior, anybody over 62 years old, to be able to tap into their equity. And when we're 62 years old, a lot of us are on retirement income. We don't make as much as we used to when we were working. If I was to go out and get a loan today, I might not qualify because my income from Social Security and my husband's retirement pension is not enough to cover most loan products in this day and age. So reverse mortgage came out to be allowed to seniors to tap into the walls of their home, in essence, and pull out some of that equity to allow them to continue to live comfortably in their senior years. So it doesn't require a payment. It's the only loan I know out there, and I've been lending for over 30 years, that says you don't have to make a payment if you don't want to. Wow, my millennial daughter's like, where do I get this? It's a benefit of being older, definitely a benefit of being older. So you don't have to make payments on it. Now, it does grow. That loan balance does grow. So whenever you pass away or you leave the home to either move closer to a family or move into maybe a community living for seniors, then the loan is due. At that point, that loan balance is going to grow. And hopefully, if everything has been calculated correctly, there's still money left over for heirs or for yourself.
Okay, so, but it could be a scenario where you basically the market went down or something and there's no longer enough value in the house. And then what happens then if people need to sell, let's say, like you said, to go to senior housing or something?
Right. And that is actually has, it has happened in the past when we had the collapse of the mortgage industry and the real estate industry. When President Trump was in office the first time around, he lowered how much we were allowed to have out of our homes as seniors. So about the maximum percent would be about 60%, and you'd have to be close to your 90s to get it. So I think of it like those actuary tables that life insurance works with. It, it's tiered and it's by ages. That's exactly how reverse mortgage works. So the younger you are at 62, if you tapped into your house, you might only get 40% of the value of your home. That is to protect the house from hopefully not going upside down. Now, I'll be very honest with anybody that's listening. If you live to be 90 years old, your house may be upside down if you've taken a reverse out at 70 or so. That's the nature of the game. So what happens at that point? Well, at that point, if you have passed away or you've used all the money to live comfortably in the home, then you just give the keys back to the bank and it's a non-recourse loan, which means you don't have to pay, nor do your heirs have to pay any balance back to the bank or the lending institution. That is a protection that's on these loans for the seniors.
And how do the interest rates work? I mean, what are they charging for interest rates?
Interest rates. Well, it's a favorite subject we all have these days. We all want them to come down, trust me. Interest rates. Well, we have two types of loans. We have a fixed rate and we have an adjustable rate. So the fixed rate reverse mortgage allows you to tap into your equity, as we had talked about, but not as much. So it's going to leave more in the house. It is, I've only done two, I'm thinking the other second one, two in my entire reverse mortgage history. And they were both for purchases. So the person was coming into the home and buying a home with a reverse mortgage and bringing a lump sum from the other house that they had sold. And they used that fixed rate. They liked that interest rate being lower. And they put that down. So it was less quote down to be able to buy the home with a reverse mortgage. The most popular loan out there with a reverse right now is the adjustable rate one. And that's because it allows you to have a line of credit, and that line of credit grows each year that you don't use it. So if you left $10,000 in your line of credit, just as an example, let's say interest rates were at 5%. Next year, it would be 5% higher. Now, it's not interest like you're going to get a statement that you've always received from a bank saying this is how much interest you have. It's just saying that the loan balance, the balance of your line of credit grows at about the same rate as your loan balance, but they are two separate buckets and they operate separate of each other.
So are the interest rates kind of on par with what you'd get if you were getting a traditional mortgage?
Absolutely, they are pretty much on par. I know some seniors will ask me, well, what if I got a HELOC, a home equity line of credit from the bank? That interest rate is probably closer to 9%. It's attached to the prime. It's prime plus a margin, which is the same thing as a home equity line or a HELOC, so that it also is attached to prime and we use a margin. And so it's about the same. The biggest difference is, do you want to make a payment or not? Can you afford to make that payment? So I would say our interest rates are comparable to what you're seeing on the market today.
Okay, I see. So what kinds of success stories have you seen with people who have got have done a reverse mortgage?
Well, my oldest person was 90 years old. His wife had died. I thought, well, okay. His wife had died, and he wanted to make sure that he had a legacy left for his children. House was free and clear, comfortable income coming in. So he wasn't concerned about cash flow in any form or fashion. In relatively good health for a 90-year-old. It was really like a model for me to model myself after. And he took out a reverse mortgage so that he could put it in some of his favorite investments that he had that he felt would be a good gift to his children. His children didn't need the home. They didn't want a home. They were actually children that had given him grandchildren. So they were well settled in their lives. So this was a way that he could use the reverse to really make sure that he could pass on a legacy to his kids. My very first reverse mortgage, which still makes me a little tender to my heart, was a gentleman who called me quite a long time ago. And his wife had been diagnosed with a terminal illness, didn't have much longer to live. And he wanted to use the reverse to give her the trip of a lifetime. They were going to go around the world and travel until she could no longer travel. And so for him, that was the best use of his money that he could ever think of it. And it still gives me goosebumps because it's such a sweet story. So whatever your need is, it's your money and you can do what you want with it. Um, you know, I wouldn't necessarily recommend buying a speedboat, but if that's really what you wanted, then go do it. Absolutely.
So how does it impact at all when people are leaving the house to somebody as far as, I'm just thinking, say you bought the speedboat and then you had a, bad situation with the speedboat and then your kids are like, oh, we've got this. As long as they can pay off the loan, they get what's left of the house. Is that just like it would be with any other kind of mortgage? Is that basically how that would work?
Absolutely. So if you want to leave the house to the kids, it's definitely a conversation you need to have with your reverse mortgage lender to make sure that it's being structured to meet your needs. Remember, we're here as lenders, even though a lot of people don't think we do this. We are truly here to meet your needs with a loan, and a good lender will make sure that that happens. So if that's what you want to do and leave the home to the kids, it may not be the best loan to look at, and it definitely would be something that everyone would need to consider. One, the kids need to know about it so they really know what they're walking into. You want to make sure as the homeowner, as the senior getting the reverse mortgage, that you're not going to cause that home to be so much in a loan debt that the kids can't afford to be able to buy it. Can they buy it? Absolutely. They can buy it for about 95%. The rules around that are somewhat convoluted, but it's around 95% of the loan balance, and the heirs can purchase the home. And there's some rules and guidelines on how that title should be set up and whether you pass it in a trust. And those are all legal things that's way outside of my wheelhouse and lane to explain. But those are definitely conversations that need to be had before you go forward fully with a reverse mortgage. Can they buy it? Absolutely.
And then when the person does pass, let's say that they what happens to the house since they're probably not leaving it to anybody? What does the bank do with it? Are they just selling it as they would a foreclosure or something? Is that?
Probably they will. So that it's part of your estate. So
Hmm.
it just stays in your estate, and whatever your will in the estate has planned for what's going to happen, then that's actually what happens to the home. If it's upside down, then it just reverts back to the lender, and the lender handles it, I guess, similar to what a foreclosure would be like. They would put it on the market. They're certainly going to try to recoup as much as they can in their balance. But again, if they sold it for, oh, let's just say $50,000 less than what was owed on it, they're not going to come back to the deceased family's heirs in any form or fashion to ask for the difference, which is a big difference from what happened in the foreclosure years. And they were coming after anything and anybody that looked like they could get money back on.
Right, right. I was just wondering if there was anything that the heirs would have to do to, I don't know, to make that happen, to file
Right.
on, just, are they just giving the keys back or?
In essence, the heirs are
Yeah.
obviously going to reach out to the servicer. We all have servicers on our loans and say, Mom and Dad died. Uncle Henry is no longer with us. what do we need to do to start the process? Of course, they'll want to see a death certificate, and then the servicer takes over the rest of the details to let them know what's going to happen. I've never actually worked in the servicing department. It's probably one of the few areas in the mortgage world that I haven't actually worked in, but I know that they would handle it quite well.
Interesting. So, what kinds of questions do people typically ask you when they're considering this product?
They're always concerned about, will the bank take their house? That seems to be the very first thing. And there's like I said, a lot of negative PR out there. So it's, a well-earned, I hate to say it, a well-earned reputation. I'm here to let people know that that reputation hopefully has gone away, and the bank doesn't want to own your home. It's in the money lending business. It's not in the real estate business. So that seems to be the biggest concern that I hear during the process. It's an asset-based loan, and that's a different type of loan than anybody's ever received in the past. So we're not really looking at your credit score. We do pull a FICO score out. We pull a credit report. We only look to see how much you earn in the way of being able to cover your taxes and insurance yearly. So it's a lot different in qualifying, and they're always really surprised at how little the paperwork is, how versus doing another loan where it feels like you're just bringing in wheelbarrows of data to get your loan done. I mean, we still want to see your Social Security statements or your statements from your retirement income coming in. But other than that, it's a pretty easy loan to go through. And as I said, the only other thing I think I hear is, what can I do with my money? And the money, yeah, the money's yours. You can do anything you want with it. It comes to you. The line of credit allows you to get 60% the first year and the rest of it the second year. HUD came back and did a study on why so many homes went into foreclosure, and they discovered that if they gave people $300,000 in a lump sum, maybe there weren't some great decisions being made there in the process. And they thought, well, what can we do to kind of help that process? Because again, we don't want to own the home. The lender doesn't want to own the home. So they said, well, what if we give everybody 60% of the amount that they can receive, and they can have the balance of it the next year? It's government regulation, yes, but probably it kept more foreclosures from happening. So in a way, I guess they thought that was a good idea.
Yeah.
Yeah.
Interesting. And how did you get involved in this?
Oh, I have been a lender forever and ever and ever. I started lending back in the early 80s, and I've been a lender for over 30 some odd years. I just found that two things. I fit the reverse mortgage demographic. I'm definitely well within it. And I just saw a huge need out there. It's so misunderstood, and there were so few lenders really willing to learn about the product. If I talk to a lender about doing it, they're, oh, those are really hard loans. Big secret is they're not. They're not hard loans. They're different in thinking. How do you think? I'm no longer paying on that loan. The house is paying me. The bank is giving me money. I can get an annuity so that I get money each month if that's what I want. I can get a lump sum. I can get a combination of these two things. That seems to be the biggest thing that was interesting to me, and how I could help seniors live in their homes for longer. Yeah.
So they have the option of getting an annuity from HUD basically
Right.
for
Yeah.
the house. And how does that work?
Right. So I believe Social Security is in essence an annuity, right? It gives us a set of money. We've paid in, and there's somebody behind the magic curtain that says this is how much money is going to grow, and you're going to get this much out, right? So in essence, it's similar to that. If you have a line of credit that would allow you to have $100,000 come to you, you can split that line of credit up so that you got maybe an extra $300 a month would make life so much easier to live in the house, cover whatever particular needs you had. But you'd like to leave the rest of that line of credit in and growing so that if an emergency came and you needed to fix the hot water heater, you could. And that's exactly what's allowed. So if you call your servicer and you say, hey, I think I'd like to have a line of credit, and I think I need to have $300 coming to me each month. Service is going to look at your numbers, go, okay, we can make this work, and this is how it's going to come to you. I've had several people start with lines of credit and then increase them because of medical concerns.
Well, and that's another question. If I'm not sure if it's within your sort of your purview, but what happens when a person goes into, like, for example, if they needed to get into a nursing home, is that house still an asset? I mean, kind of, right? I mean, it's just would work the same way as if you had a regular loan.
Kind of. It is kind of, it's getting a little outside of my expertise. It is still an asset. Remember, you're still entitled, you still own it. It has a balance against it. So the difference between the balance against it and what is owned, what you own and the equity is going to be what is your asset to consider for a nursing home. If you're going to have to be in the nursing home full time, then the house needs to be sold. Because you're now outside of the guidelines that say it's your primary home.
Right,
So
right.
at that point, it would need to be sold, and whatever is left over is going to be now, and that steps outside of my zone of understanding. But that's where Medicare and Medicaid qualifying and getting into nursing homes would look at those things at that point.
Yeah, I think it could get complicated
Mhm.
if one spouse is going to stay in the home and the other one has to go in a nursing home, and then there's it. Are they? I don't know how that works anyway. When you are looking to qualify for, like Medicaid, I guess is what would pay for your nursing home, but then I don't know how it works when there's two spouses and all that kind of stuff. That's
So in that particular example, when you said one spouse needs to go to a nursing home and the other one, remember we have both people on the loan now. So
yes,
fortunately, the remaining spouse is not now on the street. Again, very bad press. We don't want
right.
that to happen. So the remaining spouse gets to stay in the home. If there's a line of credit and there's money to be drawn, the remaining spouse in the house has access to that. So that can help pay for it. Obviously, they're going to call and tell the servicer. It's always communication, regardless of whether you have a forward loan, a loan with a bank for a line of credit on a second, or a reverse mortgage. Talk to your servicer when things come up and say, he's not doing well. He needs to be in a service. He needs to be in a retirement home at this time, or he needs to be in nursing care. But I'm still here as a primary home. And they go, okay, great. That's all they need to know. If there's additional questions or additional documentation, something from the doctor, whatever, they'll tell you what they need to have for their records and their files.
Yeah,
But it's really just a line of communication. And again, that surviving spouse can stay in the house as long as they want at that point.
great. So, Laura, you've answered a lot of questions that I had. I don't think I had a good understanding of the whole reverse mortgage process and
Mhm.
how it worked. I didn't realize it was a HUD-based thing and that people are basically, um, yeah, I don't think I understood all the nuances of it. And it's very interesting, and I can see how it would be a great option for a lot of people. Um, so, are there any questions that you wish I would have asked you? Anything that we didn't touch on that you really want to make sure people understand?
Well, I think we should talk about one thing that I call it the elephant in the room when we're talking about the numbers, because the numbers are why you're talking about getting a reverse mortgage. In essence, how much do I get? That is, they may not say it to me when we're meeting or to a loan officer, but it's definitely in their mind. They're thinking about it. So the reverse mortgage is an expensive product. And the reason it's expensive is because of the mortgage insurance. Mortgage insurance is to protect you and your heirs so that you don't have to make the payments at the end if the house is upside down. So it's opposite of always what you thought the mortgage insurance was when you were younger. In your younger days, the mortgage insurance was to protect the lender. Now, same mortgage insurance as FHA has always had, but it protects the senior, the home buyer or the homeowner and the heirs. And so that was where it makes it expensive. They're not a frivolous loan. Don't chase a rate on it, with what I would tell people. Just because the rates went down, was, oh, I need to get the next drop point down. It's expensive. You don't want to do that. Can you refinance these loans? Absolutely. And I would say, look, wait a year or two and then see where rates are, see where your appreciation is. It's a loan that is benefit to you as you get older. You get a little bit more equity. This is a good thing, or one of the rare things we get for being older. And so I think that just don't chase that rate. We all chased that rate in the early days, and we all have 3% interest rates, right? We're loving it. So, but that's not how I would like to see anybody operate. And I've told people this does not make sense financially. These numbers don't make sense. Please reconsider. Is there another way we can get funds for you besides doing this? I would hope that any lender you talk to would be as honest and say the same thing.
Yeah. And that's great information, Laura. Thank you so much.
Absolutely.
So how can people reach you if they want to get more information, if they want to perhaps work with you to get a loan?
Well, they can reach me by going to lauraphillips.com. That's LauraPhill, two L's, IPS, lauraphillips.com. They can also reach me by just calling me at 303-817-4611. And I'm just here to answer questions. I get questions all day long. I'm not, I hope you see me as not a pressured person in any way or fashion to try to pressure anybody into it. I've had clients wait 2 and 3 years before they actually went forward with it. It is a personal decision, but I do think any senior will look at it or should look at it to at some point in their lifetime to make sure that they're not missing something to help them live comfortably in their senior years.
Excellent. Thank you so much, Laura.
Oh, thank you. I really appreciate it. I've enjoyed the visit.
Me too.
Yeah.
And thank you, listener, for listening. Just take a minute right now and think of 5 people you know who are 62 years or older who might like to learn a little bit more about reverse mortgages and forward this episode to them. They will thank you and we will thank you. And that's pretty good. You'll have a lot of good karma coming your way for the day. And then be sure to be with us next week. Thanks.